Welcome back to another episode of Spy Trader, your go-to podcast for insights and analysis on the S&P 500. I'm your host, Money McFunny. It's 6 a.m. on August 14th, 2024, and we've got some key financial news to break down for you today. Let's dive into the latest happenings and what they mean for your trading strategies. First, let's summarize today's key news items. 1. Inflation update. The Consumer Price Index, CPI, rose by 0.2% in July, bringing the year-over-year increase to 2.9%, the lowest annual rate since spring 21. Core CPI, which excludes food and energy prices, also increased by 0.2% month-over-month, matching market expectations. 2. Federal Reserve speculations. The market is buzzing with anticipation of a potential interest rate cut in September. Interest rate futures show that traders are now split on whether the Fed will cut rates by 25 or 50 basis points. 3. Market movement. U.S. stock futures are looking optimistic, with the S&P 500 and NASDAQ by around 0.2%, reflecting positive investor sentiment following the inflation data. 4. Corporate performance. Cardinal Health reported impressive Q4 2024 results with adjusted EPS of $1.84, a 29% year-over-year increase, and surpassing analyst expectations. Their positive outlook has pushed their stock up by over 5% in pre-market trading. Now, let's delve into some detailed analysis and insights. The inflation numbers are particularly noteworthy. A 0.2% increase aligns with the Fed's goals of gradually cooling off inflation without triggering a recession. The year-over-year CPI rise of 2.9% suggests easing inflationary pressures, which is welcome news as it reduces the urgency for aggressive rate hikes. On the Fed's potential interest rate cut, it's critical to understand the balance they need to strike. Lowering rates could stimulate borrowing and spending, benefiting sectors like tech and consumer discretionary that thrive in a low interest rate environment. However, there's still some skepticism as inflation remains above the Fed's 2% target, which may call for a more cautious approach. Cardinal Health's stellar performance adds to the positive sentiment. Their strong earnings and increased guidance for the coming fiscal year highlight the robustness of the healthcare sector within the S&P 500. Increased stock buybacks indicate that the company is in a strong position to return capital to shareholders, which is a good sign for long-term investors. As for trading recommendations, here's what we suggest. 1. Tech and consumer discretionary sectors. With the possibility of rate cuts, tech and consumer discretionary stocks might be poised for growth. Lower interest rates generally mean lower borrowing costs, and these sectors can benefit significantly from increased consumer spending and investment in new technologies. Number 2. Healthcare stocks. Given the positive performance from Cardinal Health, consider looking at other healthcare stocks that might follow suit. Strong fundamentals in the healthcare sector can create stable investment opportunities, especially in uncertain economic climates. Number 3. Watch for earnings reports. Keeping an eye on upcoming earnings reports from companies like Nvidia and Dell could provide further insights into market trends. Strong earnings here could bolster tech sector confidence, while any disappointments could introduce volatility. In conclusion, while it's a good time to be cautiously optimistic, don't forget the classic joke. How do you make a small fortune in the stock market? Start with a large one. That's everyone's friendly reminder to stay prudent. Thanks for tuning in to Spy Trader. Stay informed, trade smart, and we'll catch you in a few hours with more updates. Happy trading.